Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have George Bravante. Beginning in the early 1990s, he started with a small vineyard and winery in the Napa Valley of California. Over the past 20 years, Bravante Farm Capital has acquired over $175 million in agricultural assets, including citrus, table grapes, wine grapes, stone fruit, and pistachios. Prior to founding Bravante Farm Capital, he spent 10 years in the real estate private equity business, overseeing over $15 billion in real estate transactions. So thank you so much for coming on today, George.
Hey, I'm glad to be here. Thank you.
So you have a very interesting background. Can you give us a little bit about your background, both personally and professionally, prior to getting involved in your current farming business?
Sure. I grew up in the New York area, and my dad was a mailman and my mom was a teacher, and went to the University of South Carolina out of high school, and hardship. It's the cheapest school in the country. That's why I went there. Very, very, very tough criteria. Studied accounting there and graduated, went to work for Pete Marwick, one of the big 8 firms. And then after a year there, I didn't like it. I moved to a firm, to Ernst & Young, which was Ernst & Winnie at the time. And they were starting a real estate practice in Newport Beach, California. So that's a pretty great place. And I went out there and took a look at it and packed my stuff in the car and drove out there. And that's we built a big real estate practice over 3 years. And then I left and became the CFO for the real estate arm of the Robert M. Bass Group out of Fort Worth. It was a billionaire brothers. And anyway, lucky enough to meet them and work for them. And, that's where this big number of apartments, we were in the early stages of the RTC, kind of when American Savings was the biggest failure in history in the 80s. And we bought that from the government, and I ran the bad bank there. Wow. So it was 20 billion of assets, a big chunk of apartments, but it was every state in the union but Alaska. Really great experience. It was a very lucrative transaction. Then we formed Colony Capital after that. I was president of Colony for a while. And then I started having children and said, no way, I'm not doing this anymore. I'm not, because these are global businesses. Yeah. So when you're, I'm a young guy, it's pretty cool, but when you have a family, it's not so cool being gone all the time. And formed my own business, and it was real estate to begin with. And the family I partnered with had been in the ag space for 100 years. And they had a couple of broken assets in the Central Valley, and deal junkie George Bravante took a look at it, and we bought them really cheap. And that was the first inkling about the ag space. And I just took it from there and bought another ranch, built a packing house, sales company, farming company, cold storage. And, and we've done a lot of transactions since then. And here we are. And now what we're doing is, really great transactions are hard to find in the areas that we would only want to do them. We have this thing we call the Oasis. And that's the Fresno area, basically, where all the groundwater emanates to. Okay. So, if you look at the Sierras, there's always snow in the Sierras. It always creates runoff. So this area, the small area that we're focused on, is a place where the water is plentiful, both surface water, which is irrigation districts coming out of the mountains, and groundwater. Also amazing microclimate, soil conditions also. So, we're not going to do a lot of transactions, but, so we started this crowdfunding idea about a year ago. We bought about $20 million of assets in the last 8-9 months, all really good. And so we're going to do 2 or 3 transactions a year probably, because that's all we can find that makes sense. I mean, I don't need to do this anymore. I like doing it, but it's my passion to do this. So anyways, that's what we're doing. And it's, that's the history of it.
George, can you give us a little background kind of what your business looks like now? I know there's a number of different divisions. When I was doing research for this episode, and I was looking at one part and it said he had 14 different grape varieties. And there's a lot of different products that you're offering and a lot of different divisions that you have of your company. Can you kind of give us a little overview of what it is now?
So basically, Bravante Produce is the mothership, and that employs all the people. And inside of Bravante, we have a sales company and we have a farming company. Mm-hmm. And we have the packing house, cold storage. They're all 3 tenants of Bravante Produce. Outside of that, we have all these single purpose entities that own all the ranches where we grow citrus, being oranges, lemons, mandarins, palm, grapefruit, caracara navels. We grow all the varieties of citrus. We have pistachios. We have about 400 acres of pistachios. We only have a small amount of stone fruit, being traditional stone fruit, being peaches and plums, about 50 acres. And then we have about 300 acres of cherries, which is like going to Vegas these days. So people aren't planting more cherries. And then we have a very big table grape program, about the same size. So our citrus is a couple thousand acres, and our table grapes are about a couple thousand acres. And inside the table grape thing, we have, early, mid, and late season, and we have green, blacks, and reds, late, early, and in the middle. And we have about 17 acres of varieties of grapes that we grow. And it's funny because it's a crazy business in a sense. Everybody wants the new variety. Every retailer wants the new cool variety. So we're always trying new things and moving on. But we have a significant. We sell, Sam's Club, Costco, Kroger, you name the retailers, we sell most of them. And we also export 30 or 40% to Asia.
Interesting.
Of all these things we do. So, it's a little tougher market right now because inflation's high. So our inputs are high, but the sales prices haven't come up quite as fast. We're lagging a little bit. So it's a little tougher right now. But we're in all good water areas. Crops we grow are phenomenal. We're a smaller company. We do, 3 million boxes of fruit a year. We make, pack, pick, and ship here. That's small, medium though. Mm-hmm. The bigger guys are 10 million or more. You know what I mean? So we're a smaller, family-owned, kind of more boutique-y deal. Like we have a small winery in Napa we did early. It's something we have said. My wife and I, we got married, had a child, and built a winery all in 1 year. And we had no intention of ever having a winery either, right? We just did it because Napa is such a wonderful place. And, after that American savings deal, I made some money in that deal. So I said, hey, let's buy this and build it and do it. And we did it. And we've had it ever since. So we make really, really nice Bordeaux varietal wines, Cabernet, Merlot, blends. It's only 2,000 cases a year. It's a small winery bit thing, but it's a great, great thing also.
Oh, that's fantastic. Anyway. I have some of my good family friends. They spend the summer in Napa, so I've been out there many of times, and I'll have to look you up next time we're out there.
What part of Napa are they in?
They go back between Sonoma, and then they were in Napa, and they're like in the downtown area. It's like walking through downtown area.
Oh yeah, that's so nice. Now we moved there in the early '90s. It was a war zone down there. The Renaissance has been amazing in downtown Napa.
Yeah, it's crazy. They love it. It's the climate's fantastic, especially coming from South Florida during the summer. Oh, yeah, it's a great getting a difference. But George, I want to talk about you're talking about getting deals on these different parcels of land. And can you let us know kind of what is entailed in value add farmland investing, like what you're doing, what you see as the future value of it?
Yeah, we're here trying to sell people to come invest with us, right? That's why I'm here. Yeah. So we have a transaction right now that's live. It's almost fully subscribed, so we're almost done with it. But it's a great example of what we're doing. So it's 2 parcels. One's 100 acres. One's 40. The 100 acres was it was a crazy labor contractor guy who would just, people would owe him money and he'd just foreclose on them. And and in every job he was on, he'd steal a couple trees and plant it in this 100 acres. So it was a hodgepodge, total horrible property in a really great place, right? The other one was a pasture land that was basically owned and operated by people making methamphetamine, right? So two crazy situations. We bought both of them pretty cheap, and from the ground up, we rebuilt them. So the value add was low producing, great land with great water, with great soil, both places. Great, we don't do anything that's not within 30 minutes of my office. We generally don't do that, right? I mean, we have one big ranch about an hour away, but it's 1,300 acres, so it's like a mothership unto its own. But this transaction we're doing now, so the 100 acres is mandarin citrus, like the Cuties. It goes to Cuties brand. Mm-hmm. We have a relationship with those guys. They're the best. They make the most money, so that's why we're with them. And it's got lemons and Cara navels, which I don't know if you've ever eaten caras before, but that's like a new thing, kind of last 5-6 years. It's like a pink orange. It's more aromatic. It's super popular, really good actually. And then the 40 acres is this green grape called Great Green, which is one of the most popular grapes there are. We make quite a bit of money with that too. So this is clean sheet. We took the ground, under the ground. We prepped the land perfectly, planted the best crop, like we picked the right trellis for the right variety, things people don't do all the time. So anyway, so we got those. I mean, we're gonna close in the end of May, I think, this year. We're about done raising the money. We have a little bit to go, and it's about a 17 IRR over 10 years. So, I mean, it could be way better than that, depending on the residual value. We're pretty conservative on this. Like inflation's running 7%, we're at 2% in our pro forma stuff. We're trying to make it so it's totally attainable. We don't want to sell people stuff that won't work. Right. So, I mean, that's what we think of value add. And there's different versions of value add. You could have a ranch that's half really good and half really bad, and you buy it and you fix the other half that's bad, right? The other value add that we offer is, you can't buy ag from most families because they just borrow the money and do it themselves because they're giant and they've been doing it for 100 years. I've always had partners. I was a poor kid growing up. I had no money. I always needed partners to help me get there. So, we're very fond of partners and we like that environment. And I put up 10 or 15% of all the money in every deal we do or more, depending on where I'm at that moment in time. So, we're really good partners. We're really good fiduciaries. My wife bitches and moans all the time about, we take better care of our partners' money than our own, because it's important to me. I mean, growing up like I did, my parent, we're Italian family, we are very serious about making sure we take care of our partners and treat them right. And I mean, probably too right in a way. So anyway, so that's kind of what we do. And that's a really good example of what we're trying to do. And when you build these things with the right varieties, the right rootstock, the right water, I mean, your chances of success are so much higher. Mm-hmm. Early on, I bought ranches early on and they had a bunch of crap on them, and we did okay. But when I redid the ranches, I mean, we went like 10x on revenue. I mean, it's big changes when you have really good versus okay, which sounds funny probably, but.
No, makes
that's how it works.
So tell us about, I mean, if with being vertically integrated in farming, how does that, we have a lot of people on here to talk about vertically integrated and multifamily, which is, we know how that goes, but tell us about farmland. What are you doing maybe that your competitors or the farms that you're buying don't have in place, and that's why you're adding a lot of value to it as well?
I think, people will think this is very strange, but, the average farmer in this valley's giant, right? I mean, 50% of all the food in America comes from here, and we export a third of it, right? So, I mean, it's massive, right? And the average farm is 40 acres still. So guys like me and guys bigger than me are kind of like, gobbling this stuff up and making bigger things because you need to be more efficient today. Mm-hmm. But in citrus, I think the average citrus grower is 40 acres. And what that guy will do, so like say you had a listener who got inspired by what I'm telling him today, right? And said, I don't need George Bravante though. I'm going to go do it myself. I'm going to call a broker and I'm going to do this. He calls a broker. He finds a 40-acre piece. Doesn't know what he's got probably. They'll tell him what it is. Might not be what it is. He won't understand how to test the soil, how to test the water. I mean, they'll tell him kind of what to do, but it's a crapshoot, right? Then he's got to find a guy to farm it for him. And that guy will charge him twice as much as I'm charging our people, because I charge everybody the same. I mean, it's a market below probably a below market number, because if you're a little farming company, you got to make money, right? I mean, you don't have a scale to pass all this stuff over. So you're paying too much for the farming, right? Then that guy's got a buddy at a packing house and says, hey, I got a guy that'll take your fruit, right? They'll pack it for you. And they'll do okay, but they won't pick it at their exact right moment. They won't make sure it's going to the right buyer. They'll just pack it. So you're losing money there too, right? So, I mean, those two things are massive numbers though, in the scale of what we do. I mean, let's say we're averaging $18 a box this year on Navel oranges. That guy could be anywhere from 14 to 20, depending on who he's with, what he is. So it's vertical in that we can offer, and I'm not even talking about the stuff we can offer cheaper. Like we buy 1 million boxes, so we get them a little bit cheaper. The commercial packing house isn't going to give you that discount. They're going to keep that for themselves. So, you know what I mean? It's kind of economies of scale, as well as there's no middlemen making money. We make it one place total. And we don't make that much money packing anyway. George Bravante makes all his money at the farm level. We drive all the value to the farm, and then that falls out the bottom of the, how much money we make that year. That's how I make money. Because I mean, packing fruit is not a way to make money. If I make 500 grand this year in our packing house, I'm going to spend 700 buying new equipment. I mean, it's just kind of how it works. So, but I mean, it's a great tool though. I mean, like we spent $400,000 a couple of years ago to put high bricks detection in. So, I mean, every orange or carrot that goes over our line, we know how much sugar's in each orange. So in Korea and Vietnam pay more for high bricks fruit. I mean, no house our size even has that. You know what I mean? But our sales team uses that to make another $1 or $2 a box, which doesn't sound like much, but when you do 1 million boxes, it's a lot. So that's kind of how I think about why we've done what we've done, why we spent all this money building this place, and all that. Yeah. So you do better for sure.
Yeah. I like the one of the first things you said was it was around having more control and picking at the right time, and that's kind of, I think, the main thing about most vertical integrated firms in any part of real estate is just more control over the whole situation. And, big private equity firm, if they had their own property management, they're not going to make more money. Like you said, it's not going to be that much more money on doing the property management, but it's more control over the whole thing and getting that extra little bit out.
To take that thought one step further, right? Let's say my farmer example, they didn't pay, it was supposed to be picked. Let's say it's an Atwood orange, right? That's got to go in January. You got to get Atwoods off in January, maybe early February, right? A lot of guys will wait. They won't get to it till March, right? So when we pick stuff into a bin, 950 pounds of fruit in a urethane container, basically. That's how we pick and transport fruit, right? We're trying to get 21 cartons out of that bin, packed and shipped, right? And we do that regularly, right? If you wait till March on that example, they're going to get 15. Because the fruit's going to be soft, pliable, So just think about it, $20 a box, 15 times 20 is 300. The other thing is like 450. I mean, that's a huge delta, right? So utilization is so critical to this vertical integration that we do. We spend all of our time trying to make sure we sequence the fruits so we get the most box packages per box, per bin sold into the market. Sounds simple. It's really hard to do it really great.
I would imagine so. It doesn't really sound that simple. It sounds like it's a lot of work to maintain everything between everything from vine all the way to sale. You know what I mean?
It makes a difference.
How does your company like yours, protect your downside risk? Environmental risk, obviously where you're located, it minimizes some of that, but how do you kind of protect yourself against any other environmental risk that could damage your crops?
Well, first of all, we take the maximum crop insurance on everything we have. So there's federally sponsored crop insurance on everything. And basically what that does, it protects you, like all your inputs for the year are covered by that. So if you had a wipeout year, like it rained, like hail wiped out your crop, you get all your farming back and try it again next year. That's a big thing because, without that, it'd be super risky, right? And the Fed has figured out it's better to subsidize a little bit each year than have a national disaster one year and then they pay all the money in the universe in and it's really a bad deal. So that works really good. We have a lot of water, which mitigates a lot of the problems other people are having who don't have a lot of water, right? I mean, we only buy where there's a lot of water. So when it gets really hot, we can dump the water on and the trees aren't stressed and they're fine. So, I mean, it's things like that in the area we're in. It's a critical. I mean, I wouldn't want to try to do this in other places if people are doing it. So your odds are not that great.
So, George, what would you say is some of the top reasons why investors would need or should have farmland in their portfolio?
I mean, I'm all in on ag, right? I mean, I used to be, I'm not a believer in the stock market personally. I grew up in New York around the penny stock craze. And half of my friends were crooks that were doing it. It seemed like to me. And I just never have done it. And we've done hard money lending and stuff like that, but we've never been in the stock market. So I just don't understand that, why people would want to buy air. You know what I mean? It's like, 50 times earnings. I just don't get that. Yeah. But I would say, what happens in my experience, and if you look at history, these assets, the good ones, like we're going to do, appreciate 2 to 3% a year forever. It's what happens. It's going to continue to happen, right? And then, we sell stuff $1 at a time, right? You go to the store, you buy an orange, it's 50 cents, right? We pick fruit, put it in a box, ship it to the market. I mean, people are buying more and more fruit and less junk all the time as the millennials grow up. And I mean, it's a growth market. Worldwide, supply is shrinking every day. So, I think it's a safe place to be. Like, I'm not cheering for a recession. We do better in recessions because people don't go out to eat during recessions. They go to the store. So if you look at our business over the last 20 years, when you had a little tougher environmental stuff, we did better. So, and I don't think people should dump tons of money into ag, but I think what we're offering, I got a lot of my very close friends that are doing this with me because they've seen what I've done over the last 30 years. And they want a little exposure to it, not a lot, but they want, they're putting $100,000 in or something. They're maybe worth $5 million or something like that. So I think people, it's safe, it's predictable. And then you're making 2-3% a year and you're going to make, 5-6% minimum on your cash flow. There's huge depreciation benefits in this. So you shelter your income the first 4 or 5 years as we go. And then you recapture later at cap gains rates. So it's pretty efficient. And then we're in this thing called the Williamson Act, where property taxes are real low on ag land. So you get a benefit there. So, it's a very safe growth industry because people are going to keep eating this stuff forever. And we're in one of the best places on earth to do it, just, climatically and soil wise. So that's why I would do it.
George, you mentioned cash flow. When does cash flow normally start on one of your deals? Now, obviously, it can differ deal to deal, and some are at different stages. But what does it usually start time-wise from time they invest till time they get a distribution?
It depends on what we're buying, right? So this new program we're doing, we've done about 20 million, right? We've done 3 deals. If you count the one we're about to close, they're starting in year 1 or 2 because all these things are mature. Right. And it grows a little bit because there's a block we need to replace or it's young and not producing yet. But, it's like 7 to 10% moving up kind of. If you looked at the first 20 million, it's immediate return, basically. In the 14 months after we close will be the first distribution of about 7 to 10% probably. Okay. So, but as we go forward, that's why I'm encouraging people on this last deal we have, because it's fully done, ready to go. It's making money a little bit. It's going to get better and better over the next couple of years. We got to go build it now. It's going to be tougher. It's going to be like 4 years before you get cash flow, which I'm not sure it's going to be harder to find people that, you get a better product at the end and it's pretty good execution, but still people want money quicker than that generally.
Yeah.
So, but the ones we're doing now are pretty immediate.
Okay, interesting. So over the years of your working career, what have you found, or even since you started your farm business, what have you found to be your biggest challenge?
Yeah, this will sound strange, but one thing I'm a guy who believes, I don't need to do everything. There's people that are better than me at everything, right? And I got this ag space, and I'm hiring these theoretical experts to do a lot of different things. And over the last 30 years, I fired all of them and done it all myself and my own people, because we never came out with the experts, because they were working for themselves. They had other clients. They were not as capable as they said they were. They didn't care as much. So the biggest learning curve, I just don't think I can do it better than the expert, right? I'm a confident guy, but it's the weirdest thing, right? Because I just have figured out we can do it better than everybody else, just like the other guys have figured out over their careers. And, I always thought people are like a little insular, you know what I mean? Like, why are they that way? Why are they using? And the reason is because you do better. So that's been a huge, huge learning curve for me to adapt to using our own people, hiring the best, but they have to work for you, where you control their day-to-day activities, and they're all in on making you more successful as a company. So anyway, that's been a big thing for me.
Great answer. So George, how has your relationship towards money changed over the years, from starting from not so much money to, all the properties and all the land that you guys have now?
I have three sons that are wonderful, great, really successful, great kids, 20, 29, 27, 25. Great, and I think I've been smart enough in my life. I told them from the beginning, it doesn't matter. The money's not important. It's the ride. You got to enjoy what you got to do. You got to have great relationships with people. You got to enjoy. And I've been lucky. I met some of the most interesting people on earth in my private equity days. And, and also the idea of, I'd rather make less doing it my way. So, I was a poor kid, hungry. I wanted to make money. That was my main thing. I was a paper boy when I was a little kid. And the people where I grew up still remember me as this little kid saying, I'm going to be a player someday. And they didn't know what that meant, and I was 5 years old. So, so I was a hungry, wanted to make money kind of kid. And, I was very lucky, made some money early. My family was much more driven by doing the right thing, being a good person, and being happy. And I've always been that way. You know what I mean? I don't want to go out of business, so I'm focused. But money's not that important to me. What I do is really important to me, but the money comes if you do a good job. And my wife and I and our family, we're not consumers of giant amounts of money. We don't need, what I mean? We just have a normal life, and and we do nice things. We go to nice places and stuff once in a while. But we're much more, we're the millionaire. You ever read the book The Millionaire Next Door? The guy next door looks like he's. I wear the same jeans every day. People at the McDonald's think I'm some bag man, so it's different that way.
It's such a great book. Great pull. That like 20, 30 years old. That's a fantastic book. My dad gave it to me when I was young. But very interesting and very true. Older I get, the more I learn that's true. But so George, how can our listeners learn more about you, your business, and your offerings?
We have a really good website that we've worked on really hard. It's BravanteFarmCapital.com. And we've spent a lot of time explaining in video form what we do, right? And if you sign up for it, you're not signing up to buy anything. You're signing up to get our information. Also, there are some really great testimonials in there for friends of mine and associates of mine who've invested with me. From one guy was a chairman of American Airlines, the most successful guy in the world. And how he and I got together. If people want to know kind of about us, those testimonials are great because they're from the heart, from guys that just didn't know anything about me or what we do, and have been investing for 10 years with us, and how they, it's really interesting. And then we have a lot of stuff about what stuff means. Like for instance, ranches don't trade on cap rates. They trade by the acre. That's why the values are lower than they should be. On mandarins, the cutie stuff. That stuff's trading at 40, 50,000 an acre. At an 8 cap rate, it'd be 200,000 an acre. right?
Yeah.
People would never pay that because they're conditioned that cap rates don't matter. Very predictable too. It's every year you're making good money on that stuff. So we have a whole section on our website about why that is.
Awesome. Well, thank you so much. I was on your website for about an hour yesterday preparing for this episode. So there's a lot of information on there and a lot of terms that I wasn't aware of or familiar with. I was able to get cleared up. So anybody that's really interested at all with learning more about ag, farmland, definitely go over to his website. And I want to thank you so much for coming on today, George.
Hey, I really enjoyed it. Thank you very much.
Have a great rest of your day.
All right. See ya.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.